2021. Just going to cover off support and resistance, but what we call as gaps. So just to try and break it down as easy as possible, really, and why you get support, why you get resistance, and then what we call as gaps, and why price generally goes back there. Works on all time frames, at any time frame, obviously. To get the specifics and how you can have a stop loss of sometimes maybe 15 pips, 10 pips, you go down to minute one, but eventually, or initially, you should start off with higher time frame, and obviously eventually you'll come down to those minute ones. But on this example, I'm using DAX, I'm using hourly one, and what I'm going to show you is February, March last year when we had the big drop, and this is always a key starting point, is have a look at what we call like point zero. So where was the start of a main move that can be spotted sometimes by a reversal, so price was moving up and then you have a sharp reaction to one side. So that's generally how I look at the point zero, either the peak or the trough of a move, and then ideally a sharp move in either direction. And what you'll see along the way here as price comes down, we could look at that could be this is where our chart patterns come into play. You always get consolidation, and they form these patterns. You get a sharp drop, consolidation, sharp drop, consolidation, sharp drop. And then what we're looking for is when price then comes back up. One of the things we'll look at is on this consolidation here, for example, you see a strong move up. People probably thinking it's a 1, 2, 3 buyers step in, so the big boys come in and look to buy it up. Then price comes down. So if I just zoom in on here for you, the move happened overnight there. So you had that was outside of market open, and then price crashes down, doesn't really come back up until again after that it comes down. There's no cash session. You don't actually get a chance to close that. So if that was sort of post America, pre Asia session, this is when there was obviously orders thrown into the mix. So at this point, out of hours, we had orders came in. And it's a notable spike. You'll see it's got a blue candle because it would have had one of our signals go off there to buy. But you'll see, bang, price comes up. A few green candles, potentially people think it's bottom, price just keeps going down. And what you'll notice is that price does go lower. And as it starts coming up, the bottom's in at this point. You've got an inverted head and shoulders there. So you've got head, shoulder, shoulder, neckline come across there. Price comes up, it reacts. Can you see that? So these wicks do stand out. It reacts, bang, comes down. 1, 2, 3. You could say that's a triple top of some sort. Okay, so you have automatically then created this zone. So the question is there whether they close this. This is the same time, roughly 10 o'clock. This candle was 10 o'clock. So in the cash session, they might have wanted to sell here. Price comes up and they spotted that, and that is a key area. So if I put a down arrow here, okay, so might have closed it, but that's at a different time. This is cash open. This is why the timing of moves is so important. It's not just the price, and that's why often you'll see double taps. So again, we had a tap come up here, that's then closed it, sell back down, come back up, and again that is cash open. So you've had now two when the price has done it in cash open. So this move here is probably closed that long because the first cash came down. So if they win there, they think, right, we want to get it back up. The market's come 1, 2, 3 up and going to sell back down. Doesn't, but they're going to drive price there to close this long. To close it, price comes down, comes back up. Cash comes down again to sell, and then price comes up. So what that happens is when it's done that, it's then, that once it's broken above, it needs to come back to close these prices, these positions which have closed in cash session. And what you'll actually see is there's potentially a lot of moves here. Might not have been able to close all the volume in one hit. So what you've got is comes back here. This is middle of the night there. So that these positions, was this the middle of the night or so, possibly pre-market, comes down, up, back down, up, back down, and rallies up, comes back 1, 2, 3, and then goes again. And that happens all the time. It's effectively what you need to do is look at where was point zero, where's the trend? The trend was here, then there's always another opportunity for a bounce to then sell down. And whenever you get some congestion area here and then breaks above, there's a really strong chance that there's going to be more shorts which are stuck, okay, around these levels. You can use it time and time again, even at this point here, for instance. There had been shorts come down to smash a price down to the lower level. So again, as it comes back up, you can start seeing, levels coming in here, clearing those positions. And then they've cleared the positions, because then what you've got, it's almost free. It's almost like the market can't really rally until it's closed these positions. And then you'll see, it closes them. At this point, it starts rallying, but it has to come back to close the final position. So here, close, bang, up it goes. This is a really strong move here. You've got, what's a 20% move? 2,000 pips on DAX after this position. Again, what you'll see here, the first move, bang, comes up, bear flag sells. So there's a really good chance you've got sell positions up here. Loads of them. And then what do you see when you look across the chart? Again, price comes up. At this point, again, this level here was probably clearing any longs. So say there were longs here. Say there are longs, people again trying to get in, bang, close. This one here comes back up, sell back down. Price rallies up, that 20% comes back down, close it. And this is where often it's really crazy how it works. From the breakout area there, comes to the 61.8 to 90. And I find this time and time again, it's probably an algorithm we need to, again, reverse engineer, but it's where they continuously happen. It all ties in. And then again, you'll just see, so price comes up and it uses this kind of area as support. It's trying to find a footing. Even when it breaks above, it comes back to this level. Breaks above, comes back that level. Here is a really interesting move. So can you see this level? It's not by coincidence. This level ties in exactly with this level. Okay. So again, at this point, maybe you got a false breakout, it slams back down to get to these levels. So you probably got big shorts fired in there. What happens, and when I say a gap, is price breaks above. Can you see here? But never gets a chance to close the longs. It never breaks above and comes back. Okay, so what you do find is it comes back here later on. And then once it's done that, again, you've then got a crazy move, 25%. So it's not a coincidence. It finds these areas and then it's like springboard. It rallies up. And it just happens time and time again. At these levels, I could say, if I clear most of these drawings, at these levels up here, price was coming much higher. It was coming to, potentially 90% retrace of this move. So then potentially people looking to sell back down. So what you can do is say, well, where were these first peaks? So here was a big peak, and then even here, when you get a big reaction, so price comes up, you get a decent reaction down. Okay, price comes up there, so this might have then, so they sold here, say, price comes down, and they say, right, come back up, gonna look for a retracement, and then we sell back down maybe there. Price comes down, goes back above this point, so when it gets above this point, it's created a gap. So it's got to come back down to now close all these shorts. Breaks above, it's got to come back down, close these shorts. Comes down even further, maybe because there's a lot of mess in here that it needs to sort out congestion. Breaks above. And what you'll see is when we get these areas, if I move this up now to here, actually just add an additional one. This is where you get big strong move, and then it's like consolidation. Okay, so you can extend it across your chart. And what you'll see is, again, bang, comes back down, sells. So that then at this point, because this is a key trigger, really, before a strong move, this was a key trigger before a strong move. You can say there's a really good opportunity, or really good probability, I should say, that these levels are going to get hit again. Okay, so price breaks down, it comes all the way back up, breaks above, and then comes back, and you can see these levels here, using it. Last week we had this level come back down, rally 6.5% from that low. So it's all about looking for where we've had a strong move. What I would say is, again, something which hasn't happened yet, which I think probably will, is just given the psychology of it all. So we went bang, 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 looking to sell. So all of these You could position 1, 2, 3, 4, 5 of some sort. So when it then comes back up, you know, these levels, you think, well, actually, I'm probably looking for shorts. You always look for a short on a retrace, on a sell back down. So there's a really good, strong opportunity that is a gap. You know, look at here. If I zoom in, I put a double top there, 1, 2, and this big red candle, if I show you there, happened at 8 o'clock, so it was a cash open. This was 3 o'clock cash, so both during a cash session. So what that means is price, in my opinion, needs to come back here to close those. If the market really wants to go up and there's a question mark about stimulus, and to say that's massively bullish for the market, but just think about the psychology. That's true. So if the market is going to go a lot higher, then they can't afford to leave these gaps down here. So then we start looking back and say, well, when the market does correct, it's going to need to come down. We've had really strong reaction at these levels, okay, which are probably, these levels probably relate to shorts, you know, in all of this. You know, if I just do that, this is where we seem to be getting a nice strong reaction. Then you look across and you say, well, you know, these shorts probably clearing these kind of areas. The shorts are here, shorts are here. So again, this is why you then get, this was all resistance and then it acts as support, because they want the market to go higher, but they've got to close any short. So where it was bouncing against, if you imagine a tennis ball hitting the ceiling down, it keeps hitting, it's not got enough power, then eventually springboard straight up, crash, you know, smashes through the resistance, and then it uses that ceiling almost as a springboard to then push higher. The problem is we've got gaps here. One of the tools that we can play with, and look, don't take this in going into the week, but say this was a market top here, just say it was, you know, double top from here, we can just play around with things like put a Fibonacci in. So, and then I find it, you know, crazy that here's, you know, 1.68 is here, and then it comes in with, say, this level. So what we might find is that price does come back down. If it does, this is where I get my levels from, potential targets. So I've got my Fibonacci, but it needs to tie in. The number one rule is gaps. So where have they got to drive the market to? And again, you can put some chart patterns in, you know, joining our trend lines, for example, and saying, well, if it does break out, you know, where could it be? Where could it go? Put that there. You can duplicate it, actually, if it's easier. Bring that up. Okay, and then you can say, well, actually, this was kind of a channel of some sort, potentially, you know, and again, we're not saying this, but this is how you can look to use it. Just because it's come all the way up there, you know, you can start seeing how we can get these lines of best fit. You sort of extend that down. If the market does want to drop, you know, you can always do this as your practice. Say, where was there so you get this in mind, if the market's going to go up, then they need to close shorts. If the market's going to go down, then they need to close longs. So this is really key, and I really do love these areas that just stand out when you go to an hourly one chart, and you know, there you can see this candlestick there, that's right at the top. Can you see how that's perfect support? And that's only one candlestick. You can look at the time, that helps you find the time it'll go. Then to get in the psychology of it, comes down, we get a peak up. So again, we can start saying, right, well, these are really big areas. Should it go lower down, then we can say, you know, here, this level here, when it was coming down, you had a bit of strong reaction, so counter trend, 1, 2, 3. It did kind of close a gap, but now we look at what time was it doing this. It was 8 o'clock, 9 o'clock, 10 o'clock at night, nothing during cash open. So then we can say if there was something. So this was 11 o'clock, so post-market. These are all post-markets, and we can say, well, it's cleared that, but arguably it's a cash session, you know. So 1, 2, 3 comes up, you know, at market open. Oh, where was it? Market opened here. Came up, that would have been probably 61.8 to 90 if this first move down, so there's a good chance there. Okay, so if I'm looking at saying there's probably, if it goes down, price never come back down to close it. To get more accurate, then we go into our minute 15, because if technically if price did close it that time, there might not be a gap. But here, this is all, I mean, this could be even better. You can see prices coming down, lots of red candles. That big peak sold, that was at 7 o'clock in the morning. So we've got 9 o'clock, red candle. We've got a close. This is how 3, 4, 5 o'clock. So there's probably a cash close level around 12,524. And what you will see is price then, this is overnight move. It gapped up, so there's a gap overnight and then a huge move. Has price ever gone back here? No. So I would argue that there's a huge probability that at some point, not too distant future, if the market wants to go up with stimulus, it has to close that. So please be aware of that. And that's effectively what support and resistance is. It's breaking away from areas, but then they leave positions that they've then got to come back to close. So always have a look at that. Whenever you've got congestion, it works every time frame. Whenever there's congestion, they're going to want to come down. Whenever there's a move against the trend, they're going to want to come down. So if we look at these levels here, for instance, 7:15 at night, this was a big resistance area, and it did act as resistance here. But if you notice, pull that across. If you notice, did it ever then, all the hours was in the middle of the night, Asia session, and then arguably 8 o'clock. So this is a post-market session. This is US session. And again, we're at 13,710. So again, there's a huge probability that price has got to come back to these levels. What you would then want to see, ideally, is reaction. So that resistance becomes support for the next leg higher. Okay, so that is what we mean when we say support and resistance. It's a case of just going back through, testing them, see what happens, and always marking them on there. You'll see things like this, and then it really starts blowing your mind, because you'll be like, the lows came literally there, and then bang, up it went. So they always seem to act, and you just have to start looking at them. If I was planning out now for the week coming, just to help you all out, I'd say, well, this is a big area here. So I can immediately say, this is a, hang on, let me just take this one off. I can say we've kind of got a level here, which has acted. We've had that's called like a pin bar. So big wick underneath, big solid green candles. It knows that there's a reaction there. If we go back and say, well, that happened, US time, but also that cash session, we can say, well, maybe it hasn't closed these ones, so price needs to come back down. I could look at things like this. What that does is also, we can play these areas then. What that does is it could create divergence, because if we have, for example, price making a lower low here, and RSI doesn't, then again, it's at 1, 2, 3 with divergence, and the chances are we're going to retest that high. So that's what I want you to do. Just go back, have a look through, have a look yourself. But that's what I mean by supports and resistance, which is gaps. You find that what was resistance becomes support, because the resistance is where there were big sellers waiting, they sold. But then obviously if they have got any positions where price then gapped back through and they didn't have the opportunity to sell because maybe it was during cash open, the market is then shut, so they have to then revisit that in cash open to sell their positions. Then that can act as support, and then the market goes up. So have a look, see what you think. Any questions, please do ask. But it's very, very powerful. It's probably the most powerful bit of any analysis, is working out where the other side is trapped and why they're going to take it there. Once you've learned that, you then find that the chart patterns and Fibonacci's really do benefit you. But literally just going back through, having a look is the first starting point. Here's a major low, so yes, could be position, big support there, but where was it before there? Which price, did this clear 3:15? That's probably cleared this position. Has these positions been cleared? So that's what you got to do. You just got to look back through, say, well, where was a strong reaction? Here was a big sell move. Price came up, and then so you can imagine lots of sellers waiting here. Has price come back? Yeah, it did. I mean, look at the reaction there. So all of this reaction, which gave a huge lift, ties in nicely with all these positions. Arguably even positions back here, and then use it as a springboard to go up. So I hope that helps. Any questions, feel free to ask, and you have a good weekend.